Hey there traders, welcome back to the channel. Happy New Year. This is my weekend review for the first week in 2025. Big things happening this week. I did add $25,000 more to this account so I can scale it up a little more. Let's go look at my trades. Did a few different things, experimenting with a few things. One thing I did was a Tesla put credit spread, and the width was $10, so I sold the 380 and bought the 370 put. And let's see, Tesla, I was doing a really super safe delta of 0.08 and strike price of 380, and at the time the current price was 431. And boy, did Tesla, it just really dropped like a rock last week. I went down all the way, beyond my strike price, and kind of danced around the bottom here. And so what I did was I just closed this out. It cost me $11.06 off of 96, so I ended up with 84.94. Still continuing to trade IWM dailies with 400 shares or 4 contracts against these two different leaps options, which are 2 contracts each. These leaps options that I purchased expiring 1/26/2026 act as me owning shares, but only cost me this amount to purchase those instead of spending $22,000 for 400 times 400 shares. So still doing dailies on IWM, but the price has gone up quite a bit and challenged my strike price. Definitely don't want to get assigned on your short calls when you're doing a poor man's covered call, because then you put at risk your leaps, and right now one of these is not profitable, so you actually don't want to trade when it's not profitable. But I'm going ahead and doing that anyways and just being super cautious. So I bought this back for $396 and ended up with a loss at $232 on this one. Turned right around same day and sold a $144 call. I bought that back for $804, so I collected $135.96 on that. I did another put credit spread on PLTR. I did 10 contracts, and the spread was 73 to 68, so a $5 wide spread. And let's see, the delta was about 22. I collected $500 for that. Bought this back for $10 and closed it out. And so I ended up with $490. That's really, really good. I also decided, I've been researching this IonQ, which is a quantum computing company. Very risky, but the premiums are super juicy, so I decided to take a risk. You can see the past 3 months, let's go year to date. No, not year to date, it's too early. It hasn't been doing good, but lately there's been some news, and quantum computing is getting lots of attention. It's jumped up. So I decided to take a risk here and sell a cash cleared put on that. Collected $167 and bought that back for $3. And the delta was pretty high, 41, so it was pretty close to the money. But if I did, if there's a good risk, I'd be assigned. If I did, I was looking at selling calls, and I could, with 100 shares, I could turn around with the wheel strategy and be pretty safe, get some appreciation here, and still collect like $200 here for a higher strike price and get appreciation in the stock. This is still a 41 delta, and it's almost $200 for 100 shares of this. So I might do that again just because the premiums are pretty juicy, but there's a chance I could get stuck holding the bag on this, and it could just drop right back down to where it was. But I've read some good things about this company, and I think quantum computing now, along with AI, is one of the biggest things that's going to be burgeoning out in the next year or 2 years, and the market for this is just absolutely huge. So let's go back to my spreadsheet. This IWM, I made a mistake here. Instead of selling some calls, I did buy calls, and so I collected 120. So I just put a negative here on this, and then once I discovered that I'd made that mistake, I closed it out and sold my contracts, collected 96, ended up at 24. So the next day, just continuing with the dailies on IWM, pretty low delta here. I did a buy to close, collected 176, buy to close 24.12. You can see the buy to close last month, a lot of the buy to close was like, I closed them for $1 each. So there's 2 contracts in December, $1.03 each, close these out. But the price and the market has gone up recently, so it's been challenging my strike prices, and so I have to buy these back for a little bit more once they start to get too close. With NVIDIA, I've had 600 shares, so I've been selling 6 contracts. This is actually a roll. So from December, I had this 6 contracts call. You can see I rolled it out here. I collected 606 initially. So instead of putting the buyback here, this month is kind of over, so I just put it here. And so for NVIDIA, I have rolled this. It cost me $216 to buy these out and resell at $2,064. So I collected $1848 in one day. I've got the delta super high on this because if I look at NVDA, I think it's a great company, and it looks like it's gonna take off more. I've got shares that average cost of 136, and I kind of hate to let them go, but I'm not sure what's going to happen with the market, and if this drops, I don't want to be holding the bag and have. At the time, my account was like 164,000, so that was like half of my account here that I had tied up in this, and that's just too much. And I'm learning that I need to be more careful with things, and so I'm reducing my risk and making good premium along the way. So the high delta 45, these are going to definitely, almost definitely get called away because the price is 144 now, and my strike price for the put was, or for the call was like 137. So definitely in the money is going to get called away. But then I'll have the $88,000 that I can use to deploy and keep making premium in other ways. I consider this a working account. I'm not going to buy and hold except for these long-term, my long-term position in VUG here, which is the Vanguard Growth Fund. And I've also got 75,000 now in my Vanguard account, another brokerage. I've got it all put into VTI, which is the Vanguard Total Stock Market Index, and that typically goes up historically 10% a year, so 75,000. Once I make premium here, I'm going to put some into this VUG and some into my long-term VTI and Vanguard and just grow things that way. And so continuing with my IWM dailies, collected 112 here. This one went in the money, so I had to buy it back for 308, collected 196. So having some issues with IWM here. I turned right around and I sold a put at a high delta 52 right at the money. Actually, it was in the money a little bit. The strike was 222 and the current price was 221. So for a put, usually you want to have your strike price below the current price. So I thought I could just pick up some good premium here. Ended up buying this back for $24, so collected $596 there. And then another daily calls against my 400 shares. Very safe delta 16s it's in process. So I collected $88 there. So all in all, this month so far, I've collected $31.06. Some of this, I did the trades in December, but I had already made a video and closed out my December, and that was probably my biggest month yet. I decided to just start counting things in January. So, but December actually, if I count these, let's look at the trades here for December. That would be another 618 that probably should have been added to here. That puts me at like $6,400 here for December, but I'm counting this in January, and I still have, after this week, let's find my calendar here. I still got 4 full weeks in January to hit my goals. My goal is to get up to 10,000 a month in premium, and so I'm well on my way there with this, but we'll see without this if I can hit that as well. Last month I did well, some premiums and dividends. A lot of these are coming from high yield positions I have. I did buy a little more SPY-I. I bought some more XDTE, SPY-T. Not sure I want to keep that. RDTE. I'm going to stick around with these for a while. QQQI. I bought some more of that. Devo. Again, this is a working account. This is a good long-term stock to hold. I've got 41.25 in this, so I've got an order placed to sell if this reaches 42, and right now it's at 40. So I'm not going to hold Devo forever. If I look at XDTE, RDTE, SPY-T, SPY-I, QQQI, let's go look at those. So the NAV is good in this one. It was down for a while. It's back up to my cost, and I collected 33 cents on 12 shares. Now I've got 100 shares, so this next week, these pay weekly. It'll be $33 if it comes out to about the same. That's XDTE. RDTE, the NAV is coming up. It's better. It's still down a little bit, but we'll see what happens with this. I got 252 shares of this. I collected $59 a share, so right now I collected $149 for this. So these are kind of addicting as long as the NAV stays pretty good, but you can see I'm down because the NAV is down for this many shares, 596. So until this goes up, I might, if this starts to go down and keeps going down, the NAV never recovers. If the NAV never recovers, I'm gonna just dump these because these guys are doing what I want to do, which is sell calls for premium. Is what they're doing. So Defiance, S&P 500, SPY-T, the NAV is 1925, current cost 1972, so I'm down a little bit. I only have 4 shares on this, so I'm kind of researching. I might dump this, but this pays monthly 32 cents per share. The NEOS ones I think are pretty good. I've been researching these and liking them better than most of the others because the NAV doesn't seem to degenerate or go down, but it's down a little bit for me. But the whole market's been down, so we'll see how these come up. I got 120 shares, so this came out at 51 cents per share with 100 shares, so I made 51.67 there. My other NEOS, the NAV is above my cost, so I got a little return there. Got 100 shares of this, and this pays monthly. Last time it paid 23 cents. So we'll keep all those for now and see how it goes. I might pick up some others and research them. But I see all these YouTubers saying how great everything is, but they got like WiMAX and the NAV just goes down. So I don't know why you would want to invest in something where the NAV, your money goes away and they're paying you a dividend, which you got to pay taxes on. It's better just to invest in the underlying. Anyways, we'll see. It's nice to pick up a few $100s without doing anything at the end of the month or weekly for some of these. Going forward, I'm going to continue to do the daily IDBM selling calls against my LEAPS options, and I'll probably continue to make premium on NVIDIA. I'm considering doing more LEAPS options on like Microsoft. If I look at Microsoft, this is the 1 hour chart. If I look over the past year with the daily chart, the trend has gone, up pretty good. Right now at the Bollinger Band, it's at the bottom. So with the trend going up and down at the bottom of the Bollinger Band, this could go way up this year. And Microsoft's investing like $88 billion into its AI infrastructure, and they're a powerhouse. They've got a lot of big things coming up. You can never count Microsoft out. And I think they're going to remain, of course, they're a solid, profitable company long term. If I look at the 1 month chart, the 1 hour, it's at kind of at the top of the Bollinger Band, but we're kind of at a dip here. And this is the bottom of the Bollinger Band here, and it's gone up, started to go up quite a bit. So maybe it's on the uptrend. I do see levels of support here. So this level here at around 415, it's gone down there before and bounced up, and it went down to there again and bounced up. And so I think this might be on the uptrend. Again, you want to do LEAPS options on a down day, and it's not really a down day. It's down year as far as the overall trend, but the RSI here is pretty high, so I'm not sure I want to do this yet. But I could. I'm pretty confident that if I bought some LEAPS on Microsoft, that they would go up. So instead of $44,000 to buy 100 shares and sell covered calls against them, I could buy calls. Let's go out to January 2026. Here's the 69 delta. So for $6,500, I could pick up a leaps option, and then I could sell calls against this. So if I did a covered call at a pretty safe delta, this delta is under 20, I could make $81 a week. This one I could make $141 a week. Say we make $100 a week times 52, and that's $5,200 a year. Divided by 6,500 cash, that's a 80% return on capital there. Plus, if the leaps go up over the course of a whole year, that gives lots of time for it to go up, then the value of the leaps options will be, an added bonus, another few $1,000s. I'm not sure what that would be, but actually we can go look here. So if I look at MSFT expiring January 26th, January 16th, and I do a long call at 400, break even would be 9.7%. So if Microsoft went up 9.7%, I would break even. And anything after that, let's say it went up to 15%, I'd make $23.20, and I could sell these options for that price or somewhere close to that. So I'm considering doing that, but I also might want to slow down because I've got much more money to work with, and I've been doing a lot of different things, and so I might want to just slow down and take it easy, see how this next administration goes when it comes into play, and see how the economy does for a couple months. And there's a lot of unknowns there, so I'll see what happens. I want to be a conservative investor, but I get excited and I want to make moves all the time. So sometimes doing less trades is less risky and you make more money. So I hope that this video helps, and glad you're following along. And if you got some value out of it, please hit the like button and make sure to subscribe. And we'll see you next week. Thanks a lot for watching.